Hey, good afternoon, everyone. Marty Mazzora here, March 20th, 2022, with just a very quick technical update for you. Doing these a couple times a week now with all this movement that we're seeing in the markets in both directions. And while, as I continue to remind you, we think it's the fundamentals and the macro that really matter in the context of how we manage money, we do think the technicals are important, both short-term and long-term. We use them in our work as indicators of timing of entry and exit levels and rebalancing and so forth. And, they are instructive. And I know a lot of our clients are watching the markets daily, if not intraday. And I think I think there's some value in having them take a little deeper dive with us. So recall, those of you who have been with me on the videos here, that last couple I've shown a pretty bullish looking daily chart, right? We had these positive divergences in our two momentum indicators against a falling wedge pattern right here. And sure enough, we broke out of that with force. So this is Monday's bar, but Tuesday, Wednesday, Thursday, and Friday had quite the rally. Now, when we were doing this on Thursday, we were just running up against this resistance here, and I suggested that this retracement level and this other defined resistance line here might pose a problem for the S&P, or I think I implied that. Well, not at all. Friday, it just roared right through it. Actually closed above the 50-day moving average and right up against the 200 and this all-important 50% retracement. And that's coming back 50% from the bottom here back to the top right here. Okay. So, and I mentioned back down in here that here you've got quite the wall of resistance, and that's right where the market ironically closed on Friday. Now this rally, interesting because it happened during a week where the Federal Reserve made about as hawkish a statement, I think, as they could in terms of promises of future rate increases and balance sheet reduction. And the market very much took it in stride. Now, I've seen a lot of commentary that said, the market tends to rise during tightening periods and it was already discounted and so on. Perhaps. I actually just think the market's distracted with perhaps bigger things in the short run. The Russia-Ukraine situation, we continue to see, hints that negotiations are improving. News out of Turkey, who is trying to negotiate a ceasefire, said they've had very constructive talks. All the while, the bombs, sadly, keep hitting. The Friday morning meeting between President Biden and President Xi, after the news came out that China's part of the conversation was all about, we want this to end, we didn't want it to begin with, we're not taking sides, we're not providing support, and so forth. The market really ramped up. So folks, what I'm thinking is that, for the moment, the big news has, elements of hope in it. That buy the dip mentality is looking for an excuse, and it's found a couple here of late. And that explains, I think, largely what we just experienced. And then again, when we look down here, the technicals were pretty much calling for it as well. So you can see that the momentum was moving in the right direction for a breakout higher. And one of the things I wanted to show you this morning was some real improvement technically on the weekly chart. So remember, we had this bear flag pattern, and I showed you historically that when we break down below the 50-week moving average and fail a retest or two, that over the last 30 years or so, in virtually every single occurrence, we ended up testing the 200-week moving average. So this is that setup. However, on Friday, with this big candle right here, which really technically is an engulfing candle, right? The body of it engulfs the day before. And in this case, it engulfs 1, 2, 3, 4 days before. So that's a very strong, weekly candle right there. And it closed above the 50-week moving average. So the bulls can get, a little bit excited about that right there with that big action this last week. Now, if it fails that, you could say there's nothing worse than a failed breakout. And we did break out above that 50-week moving average. So, next week's going to be very, very telling, I think, in terms of what we should expect from a technical perspective, going forward. So for the bulls, hopefully this will continue and there'll be more good news and we'll get right back up here. Wouldn't count on that just yet. And longer term, looking at our monthly chart, we're still very much dealing with a sell signal. As I've shown you, when you go back about 30 years, nearly without exception, you come down at a minimum, you test the 50-month moving average, and there's quite a bit of daylight between here and there. So from a long-term technical perspective, using the monthly chart, this is not a good look right here, folks. Where we go from here, of course, remains to be seen. And again, I wouldn't hold my breath right here in either direction on a short-term basis. It's going to be interesting. And I'll say it again and again, this market has some serious headwinds going forward, which is why we're hedging and why we're staying uber diversified, if you will, currently. Folks, thank you, as always, for watching and listening. Talk to you again soon. Bye-bye.